Hello, fellow investors, and welcome back to Borex Investing. If you're new here, I cover the latest news and insights on the high conviction tech stocks that I personally invest in, especially in the AI space. So, we're talking about names like Palantir, Nebius, Nvidia, Tesla, and a few others. I post at least one video every week, so follow along if these are stocks in your portfolio too. So, in today's video, I wanted to break down what's been happening in the data center stocks. We've seen a lot of negative headlines this week, so we'll unpack that noise and how it's impacting our favorite names. I'll also cover some important positive developments you might have missed, including potential catalysts that could lift stocks like Nebius back to our previous October highs. And for the first time on this channel, I'll also be sharing my thoughts on IREN, so stick around if that's on your radar. All right, so starting off with the broader market, things still don't look great. The cooling CPI data, which came in lower than expected, gave us a small boost, but we're still down about 3% from our October highs on the NASDAQ. So most of the AI complex is under pressure right now. Names like Nebius, CoreWeave, Oracle, Nvidia, Palantir are all down from their highs. So Tesla was one of the few names that looked great all week, driven by renewed excitement around the robotaxi expansion. And Micron delivered some fantastic earnings, which saw their shares pop as well. We did have some relief on Friday, but I really wouldn't call it a Santa rally just yet. The Nasdaq and AI stocks have been hit hard over the past few weeks, and data center names in particular look very weak compared to where we were before just a few months ago. So, what was driving the negativity in the past week? Well, let's walk through it. First, we saw two negative data center headlines that really spooked the market. The Wall Street Journal ran what was essentially a hit piece on CoreWeave, focusing solely on debt financing concerns. So this wasn't new information, but it continued to fuel that fear, uncertainty, and doubt across the entire AI data center space. So it dragged down names like Nebius and IREN along with it. Then we had that whole Oracle Blue Owl situation. So Oracle was planning a massive $10 billion AI data center in Michigan as part of its Stargate initiative with OpenAI. Blue Owl Capital, which was set to finance the project, reportedly walked away. According to the Financial Times, lenders grew uneasy as Oracle's debt climbed to roughly 108 billion. They demanded tougher terms, and Oracle ultimately paused the deal rather than accept them. So shortly after, Bloomberg reported that a separate equity deal is now in place, one that does not involve Blue Owl, and that the project still remains on schedule. So remember, this comes after last week's Bloomberg report that Oracle had pushed some OpenAI data center timelines from 2027 to 2028, citing labor and material constraints. Oracle quickly pushed back on that as well, stating that no contractual milestones have yet been delayed. So, at this point, it's pretty clear what's happening. These are short term sentiment driven headlines, not structural issues with the AI demand. Oracle does not dictate the AI trade, and this noise is likely to fade over the next coming weeks. So, this is giving me absolute Daniel Drew vibes. If you're familiar with Wall Street history, Daniel Drew was a financier who made his money in the market by manipulating newspaper headlines to his advantages. So it just kind of seems weird with all this AI FUD in the media recently pushing all of these stock prices down. Maybe it's a coincidence, maybe not. I'm not sure. But unfortunately, for names like Nebius, which compete with CoreWeave directly and do not share Oracle's balance sheet concerns or any OpenAI execution risk, they faced a lot of downward pressure on their stock and they were really hit with this collateral damage. Now, I know a lot of you out there also invest in IREN. So I have gotten a few requests to cover it. IREN is not a stock I personally own, and it is down now about 40% from their November highs. And it seems like the hit to IREN in the last month has been the hardest. At one point, it was down almost twice as much as Nebius and CoreWeave in the last month. So, my personal opinion on Iran is this: they almost have the unfortunate double hit right now because of their history. So, Iran was originally built as a sustainable Bitcoin miner operating large renewable power data centers, and Bitcoin mining remains a meaningful part of its revenue and cash flow today. And as we all know, Bitcoin is not having a good moment right now. Iran does not appear to hold large amounts of Bitcoin on their balance sheet, from my understanding, but its Bitcoin exposures come mainly from ongoing mining operations as it's increasingly pivoting towards AI and data center infrastructure. But this is like a dual hit for IREN. The data center space is facing pressure that's already not good for them, and then adding all of this Bitcoin pressure, it's just not a great look for investors. So they're getting hit from both sides here. Now, do I think Iran could be successful? Absolutely. They are forecasting over 115% revenue growth in 2026. And their founders, who are also their co CEOs, are constantly talking about the insane demand that they're seeing. To doubt the data center trade right now honestly makes very little sense in my view. If you believe the future includes driverless cars, robo taxis, humanoid robots, AI enhanced healthcare, education, corporate workflows, and even AI generated movies and content, then all of that requires an enormous and constantly growing amount of compute. That data has to be processed somewhere, and that means that large scale, reliable data centers are going to be running around the clock. Because of that, I believe there is room for multiple winners in this space, including Nebius, CoreWeave, and IREN, even though my pick from the bunch would be Nebius. I'm expecting IREN to have a great 2026, and like I said, I feel like I missed the boat here. And right now, the options are pretty expensive on IREN, so I will likely just be cheering them on from the sidelines. Now, going back to the broader market, it's not been all bad news related to the data centers and the AI spend. And we might be finally seeing a sentiment shift. So, speaking of the data center bill, the US House passed the SPEED Act, a bill backed by major tech players like OpenAI and Microsoft, aimed at streamlining federal permitting for AI infrastructure projects such as data centers. So, supporters of the act argue it is critical for maintaining US leadership in AI versus China. Obviously, the SPEED Act is bullish for companies like Nebius and IREN because it directly attacks one of the biggest bottlenecks in AI infra today, and that's permitting and time to power. More broadly, the SPEED Act reinforces that AI data centers are now a strategic national priority and not just a private sector trend. So, this political backing is great, but let's remember this has to be passed in the Senate. And of course, there has been pushback from politicians like Bernie Sanders who fear this process is moving too quickly. Quote, we need all of our people involved in determining the future of AI and not just a handful of multi billionaires. Okay, Bernie. So let's remember Nebius currently has three data center builds underway in the US, in Alabama, Missouri, and Indiana. They are also close to completing their data center in Vineland, New Jersey. So we're still waiting for formal updates from the company on these three data centers, but I think announcements around these projects could come soon and they will act as meaningful catalysts for the stock. Also in the news, the US Department of Energy announced that 24 major organizations, including Nvidia, Palantir, OpenAI, Google, CoreWeave, and Microsoft, have joined the Genesis mission, an initiative launched under a presidential executive order to link supercomputers, national labs, and AI tools into a unified US research platform. The goal here is to accelerate breakthroughs in energy, biotech, and advanced tech while strengthening US scientific and AI leadership amid rising global competition. So this is obviously bullish for the AI trade, so macro headlines seem to be shifting in our favor finally. And in other potentially bullish news for the data centers, Sung Cho of Goldman Sachs Asset Management states the next wave of AI capex will actually be funded overwhelmingly by operating cash flows. So Goldman issued a note after the CoreWeave and Oracle driven sell-off, arguing the recent weakness in AI data center stocks reflects deal-specific financing issues and not a structural problem with AI infra. The report also notes that about 90% of AI data center investment is funded by cash and operating cash flows, with only 10% from debt, pushing back against all of these over leverage concerns. Goldman adds that the market sold the sector indiscriminately, ignoring differences in balance sheets and business models, and highlights rising barriers to entry like power access, grid connectivity, cooling GPUs, and capex that favor early, well positioned operators like Nebius. So, overall, the note really aims to reset risk perception. It pretty much reiterated what I've been saying on this channel, and I have to say that I agree with Goldman Sachs here. And remember, Goldman is bullish on Nebius. In a recent report, they highlighted meaningful upside as the market begins to differentiate between high quality operators and weaker business models. All right, moving on to other Nebius specific news you might have missed. We learned this week that BlackRock has taken a unique position in Nebius. Shout out to the X Page Top Tech Stocks US for flagging this. It appears BlackRock bought around 3 million shares back in November. So that's a pretty bullish signal when you consider the level of due diligence BlackRock usually does before entering a position. Now, in other news, Dan Ives from Wedbush gave his 2026 predictions, and number 4 on that list was actually Nebius being acquired by a hyperscaler, with Microsoft, Google, or Amazon being the likely buyer. So, from my perspective, a hyperscaler acquiring Nebius in 2026 is a very plausible bullish scenario if Nebius continues executing and scaling. For us shareholders, this would likely mean a significant premium to the current share price, as hyperscalers tend to pay up for proven businesses. And even speculation around such a move could re-rate the stock well before any deal is even announced. But it would have to be a very attractive deal for the team to sell, I think. And I'm not even sure that they're going to want to sell. Let's remember, Nebius CEO Arkady Valash did turn down a deal about 20 years ago when Google tried purchasing Yandex. So we'll see, but I think it's a pride thing for the guys at Nebius. They're clearly builders and they want to build this up to be as massive as possible. So I don't really think that a deal is in the cards for 2026, but time will tell. Also, Nebius CBO Roman Chernin recently appeared on The Independent, where he laid out a compelling case for why Nebius is emerging as a differentiated winner in AI infrastructure. He explained that Nebius is not competing as a general purpose hyperscaler, but as an AI specialized cloud purpose built to optimize the entire stack. Chernin highlighted why this deep specialization matters, especially as customers shift from simply renting GPUs to demanding higher level managed AI platforms that optimize cost, latency, and reliability. He also emphasized Nebius's disciplined capital strategy, strong margins, and growing pricing power as capacity fills up and demand remains robust. So these are all things as investors that we want to hear. I think with customers increasingly choosing Nebius for performance and time to value rather than just price, the company appears well positioned for significant scale in 2026. So, it was a great interview overall and definitely worth watching. Roman, along with CEO Arkady and CRO Mark Boroditsky, they really continue to execute extremely well in these public conversations. It shows they have great industry experience and that they are effectively positioning Nebius in the market and getting the story in front of the right audience. So, speaking of the tech, we also learned this week that Nebius announced a new product, AI Cloud 3.1. So, Nebius is now the first cloud provider in Europe running GB300 NVL72 systems in production, and the first globally to operate them on 800 Gbps NVIDIA Quantum X800 InfraBand, effectively doubling the throughput for large scale distributed training and inference. Okay, so what exactly does this mean? Well, Nebius just proved it can run some of the most powerful AI systems in the world in real production, not just testing. So this signals the company is ready for businesses that are moving from AI experiments to full scale real world use. The latest updates make it easier for companies to plan, share, and manage computing power while improving things like speed, reliability, and security. So the key takeaway is that Nebius is actually building products that perform very well. So this is great news. All right, so to wrap this up, it's been a rough week for the most part, but that's how markets test conviction. The short-term headlines, financing noise, and macro fear are creating volatility, but the fundamentals have not changed. AI demand is accelerating, governments are stepping in to fast-track infrastructure, and capital is largely being funded by operating cash flows, not reckless leverage. I think better times are ahead. With these high beta AI stocks, they are very volatile by nature, but remember that volatility works in both directions. And the setup looks like an opportunity right now and not danger. So seeing Nebius sub 80 was definitely a buy the dip moment for me. So I have been adding shares here as we are severely underpriced. But all right, that's it for this week. If you found this useful, please like and subscribe, and let me know in the comments, would you like to see a hyperscaler acquire Nebius at $200 per share? Thank you, and I'll see you next time.